being in the same waiting room, right? So you have this waiting room where people are looking at the price, what their monthly payment is, and deciding, exactly when is the right time to buy. At the same time, the people that are in that waiting room are also going to be looking at, when rates do come down and people, that will create more qualified buyers, what is then going to happen is you're going to see more demand, right? So I finally do think that we're reaching a point where the projections over the next year are that rates are going to come down. And you're already seeing the banks react to this. If you've seen your savings rate come down in a year, over the past year, if you look at your online savings bank rate, you're seeing that the banks are anticipating lower rates, right? So that's why the easiest thing to do is just really check your savings rates, right? That's the direction of rates, and rates are coming down from that aspect. Why is that? Because you're seeing that it's coming to a time when inflation's coming down, everything is beginning to line up. And this week is actually a really important week because you're going to see the Fed meeting this week, and you're also going to see inflation come out, right? So you can actually just take a look at the 10-year Treasury today. It's in the 4.3s, and inflation comes down, and the Fed communicates that in the near future they will be lowering rates. The 10-year Treasury will move ahead of that, and then so you'll see over the next couple, immediately this week, a little drop in the 10-year, and then into the next time that the Fed does cut, which is projected to be September, 10-year Treasury rates, or the Fed rate to come down, and the 10-year Treasury rate to follow that down, right? It's the 10-year Treasury rate that leads into lower interest rates, right? So you can actually just take away from this little talk today that just keep an eye on what happens tomorrow and Thursday and Friday. And if you see the 10-year Treasury come down, that's the path that's been being predicted. That's why I pointed out, the easiest thing to do is for you personally, just to see your savings rates come down. We're on that path that's being predicted to lower rates, right? So when that happens, more people are going to be qualified, right? More people qualified is going to lead to more demand. More demand is going to push up prices, right? So I would just be very conscious if you have buyers today that are on the line, that they're interested, check out the rates, check out the payments, because you can get mortgage rates from 5.5% to 6% today. When that drops to the fives, the amount that people that could be $500 a month, right? $500 a month to somebody could be the reason why they're willing to buy, because you want to buy, you want to go somewhere, you want to live there, you want to buy there, but you also want to go out to eat in the neighborhood, right? And that's the $500 is the difference in a buying decision to some people. So I would just be very conscious to take a look at what happens today, see how it flows, right? It flows from the inflation coming down, from the sorry, I thought it was the nanny. I have 8 months old, so I thought it was the nanny. I was like, anyway, I'll take a couple questions, but let me just bring this home real quick, right? You've seen in your personal savings rates coming down, right? Marcus is no longer 4.5%, 5%, right? So that means that the banks, in the accumulation of their knowledge, is predicting that rates do come down. I think that this is the week that you start to be on that path, and you can just check after the Fed speaks tomorrow, inflation comes out on Thursday, compare today's 10-year Treasury to Thursday and Friday's 10-year Treasury, and we're going to be on a path then into September. September is predicting to be very busy. Pre-approvals are up. All the bank data has that people are walking to branches more, looking to pre-approval. So, we're getting there, and just be present for it. And if you have any questions, please let me know.
I'm a buyer. I'm waiting till it gets down to 2.5% or 3%. What do you have to say?
Never. It's just never going to happen.
And we have this conversation with people all day long that are on the fence or have been in the market for a year or 8 months, and I'm waiting. It's not going to happen.
It's not going to happen. And you also see asset prices on the stock side the highest they've been, right? So if you're coming into a September area with rates coming down and people's investment accounts the highest they've been, you're going to see demand. So I would just be very prepared for that, because that waiting room is about to become waiting for lower rates and lower payments to the waiting room that was we all got a higher price.
Yeah, what are you telling sellers who have like 3% and need to move?
Nothing, because I never speak to them, but. No, it's not, I only deal with the buyer, so I don't really, but you do run into past clients, I was making a joke, but you do run into past clients that outgrow their place, they wanna move, and they get into that, okay, what do I do, right? You know, people have called up to ask about, because I always try and take a conversation from someone's goal to like where the value is, right? So like, in that situation, in the experiences that I've had, I've talked to them about accessing the equity in their property with a refinance cash out maybe, and then going to buy another place. So you still retain the asset and you move on with your life. I mean, the 3% mortgage was great while you had it, you know, and that's okay. But retain the asset, find the value, and, you know, go on with your life plan, because your house is your house where you live is not gonna get any bigger. You guys, and also, you know, relationship discounts are a big thing. I mean, actually here we were closing a loan where the person got down to 5.375 because they had a prior employer's 401k that was pretty significant. So they gave them 3/8 off the rate. So it was, you know, rates I think are better than what people think they are, and I think they're also going to even get lower in the short term.
So let's say you have a 30-year mortgage. If you get an arm, would the rates go up and down throughout time or no?